If you want to make real money in crypto, this will be the most important video that you will ever watch. It took me years to become profitable crypto trader and investor, and it took me even more years to compose and simplify the concepts that I'm gonna be sharing in the following 8 tips. And don't just take my word for it. I've done the research and I've studied one of the most successful traders in the industry, and I can tell you all of them in one way or another discuss the topics that we're gonna cover today. But that's not all. Since I know how hard it could be to implement all of these into your strategies, I'm gonna give you an extra tip that will help you glue the process together and become the trader that you really want to become. Let's jump right into it. The first tip is that new tokens usually always outperform older tokens. And let me give you a specific example. Last cycle, we had a bunch of layer ones that launched like Solana, AVAX, and so on. And they have already gained huge communities and popularity, but also they have a bunch of back holders that were buying in the back of the bear trend, hoping that this will go up for another leg. So what happens when we get a push to the upside on those tokens is that these people that were in loss for months, years even on end, will be looking to sell at break even, and that is causing selling pressure on the market. This has always been the case, and in my opinion, new projects like the layer 2s that are just launching will always outperform these coins that already had a cycle. The second tip is actually related to the first one, because the price of crypto in general is driven by narratives. This is probably one of the most important things that you need to learn about crypto. Last time around, we had narratives like the layer ones we already discussed, but now we'll have brand new narratives like layer 2, NFTs, and bunch of others that you need to be aware of. This is usually what drives price and the 100x's that you look for in a potential bull market. In a span of a year or so, you could have a few narratives play one after the other, which means that you could buy into one early and then sell at the top and buy another one when it's just starting on. For example, we just had a Pepe narrative and the meme coins exploded on all the dexes out there. You will probably miss some of those narratives, but that's fine. The goal here is to take just one or two to make the astronomical gains that everybody's looking for in crypto. Most people, when they start out in crypto, they're looking for those amazing gains that will buy them a Lambo, nice house by the beach, and so on, and that they are going to be trading crypto full time. And I can tell you from experience, if you start with this mindset, it's definitely a recipe for disaster. Crypto trading, like pretty much every other skill in life, is hard, and it will play very hard on your mindset, and you need to learn a lot of details on the market in order to understand it. It will probably take you years to master it truly, even if you get lucky in the beginning and you make a lot of money, which means that in the first few years you won't be that profitable. And if you quit your job way too early, this could be a lot of stress. And to be honest, even if you become profitable, my advice would be always have a side income. It might be that you have invested your crypto profits into a business or real estate, or you have a stable job. But when you have this covered, your basic expenses for everyday life, it makes you a much better trader. At some point, if you're really good, yes, you can quit your job and do whatever else, but I always emphasize on this. It's good to have certain income that it's stable and it's not related to crypto, because the risk here is huge. The first and most important rule that you need to master in crypto is how to manage risk. I could probably do a whole seminar just about risk management, but just a few tips here. You should be using a top-down approach, which means that first, if you have a portfolio of, let's say, $100,000 and you have all your assets in this basket, how much of a percentage you're willing to dedicate to crypto based on your risk profile? It could be 5%, it could be 50%. It's up to you to decide. And then within this basket of crypto that you're going to be investing in, you have to define clearly the risk for every single trade that you take. And my advice would be to always take trades at least with 2-to-1 risk to reward ratio. This means that potentially you could be winning just in 30% of your trades and still make money. And this next one will be probably the hardest to master, but it's extremely important to create plans for every trade and execute it like you have a huge portfolio, whatever that is for you. It could be 100,000, it could be 10 million, but think of every single trade in this matter. Will you be putting 10% of your portfolio on this specific trade? Why would you do that and why not? We tend to trade with small amounts, with a lot of shitcoins and trades that probably are not great setups, but we still have the urge inside us. And if we adopt this mindset, this will save us a lot of time and it will avoid a lot of bad trades for us. And also you need to think about it objectively. If you put, let's say, $1,000 into a trade and and that is a really small amount for you. And even if it goes in your favor, how much money would you be making if this is not a high conviction play for you? However, if you put $10,000 into a high conviction play, it could even make you more monetary amount, even if the percentage gain is not that big. This next one was also very hard for me in the beginning. More trades mean more stress, but they don't mean more money. The best traders I know are not day trading crypto. They're more like swing traders or just accumulate tokens and sell them at a peak of a bull market. And if you're trying to get every peep out of the market and day trade, that's not a terrible strategy, but keep in mind that 90% of day traders are not profitable, and you need to be using leverage, which introduces a lot more risk into the equation. And also, since crypto is trading 24 hours, you will introduce a lot more stress in your life. Every time I've tried to day trade, I've had problems with sleeping. I wasn't that even profitable, and I have always found my sweet spot pulling back a bit and lowering the number of trades I've been taking. This next one is also very hard to understand for beginners, but having more tokens in your portfolio won't make you more money if you just have few conviction plays that you really believe in. We've talked about narratives earlier in the video, and trust me, right now I'm researching more than 30 tokens that I kind of like and potentially I want to put money into. However, out of those, I will pick just one or two from each narrative, and I'll try to keep my portfolio tight with not more than 10 tokens. It gets really frustrating to try and track all of these charts at the same time, and usually if we get into a full-blown bull market, all the tokens move in sync with each other. So maybe one of them will make a 10x instead of an 8x. But the goal here is to find a balance between being profitable and keeping your stress levels at normal. Just like in every other market, the potential to make and lose money in crypto is huge, and you have so many different strategies. For example, you could trade shitcoins, you could be swing trading, you could be accumulating tokens that you really like, you could be just putting your money into Bitcoin every month and not giving a fuck about the market. But the best way you can approach this is to find your own strategy that fits your profile and your risk tolerance. If you try to learn and introduce several different strategies into your trading, that's a recipe for disaster, because you'll be flip-flopping between decisions, and usually the best traders have just few trade setups, like 2 or 3 trade setups that they always look for, even in just one chart, and they trade based on these rules that they have created for themselves. As you might have noticed, there is a certain trend in most of these tips, and that is less is more. Write this down and try to remember it the next time you want to jump into hundreds of shitcoins trading. And now to the secret sauce that will really help you implement all of these strategies into your trading. I know most of you are general crypto apes, and you tend to trade a lot and find opportunities and FOMO into stuff just because you saw astronomical gains on Twitter, and that's completely normal. I've been the same way, and sometimes I even still do it. However, with time and experience, you'll find less and less value in such kind of behavior, and that's why my advice would be have an account which is separate, completely separate from your main trading and investing account, and do whatever the hell you want just within this amount of money. Try all the strategies out there, ape into all kinds of shitcoins, take trades that you are not supposed to be taking, because the key word here is experience. And all of the tips sound very good in paper, but implementing them is really hard unless you gain the experience and you see yourself making all the stupid mistakes that you will be doing on your path to becoming profitable. Once you've done a bunch of them, then you can review this video back and you'll be like, oh, okay, maybe I took too many trades, so I should be taking less trades. Or, oh, I don't need 30 tokens in my portfolio because 2 or 3 of them really made the big gains and most of them pretty much did nothing. I hope this video was useful for you. If you really liked it, let me know in the comments below, and I'll see you in the next one.